Okay guys, just having a quick drink there before we begin. And I'm quite excited to be going through this particular teaching now. And it is a setup. It's a way that we can get into trading, a trade and execute on a trade. So, it really is exciting. So, welcome to Lochiel Trading. And we are going to go through a specific setup that I look for on a Friday. Now, it's not every Friday that we can look for this certain trade, but it is this Friday. And this is why I'm teaching it now. So I'm teaching it live. I'm actually teaching, not in hindsight, using past data, which is also is fine. You know, you can learn off past data, but I think it is a good way for me to teach you through a live feed, through a live medium. So it kind of gives more, let's say, not necessarily proof, because proof isn't needed, because you can go look at hindsight and past data and see something set up. Like, I can teach you this now and go back to previous weeks where this has occurred, and you'll see it play out beautifully. And that is just kind of back testing. So basic criteria of the setup: it has to be a Friday. And here we are on Friday. You can see the market is open. We are looking at the E-mini S&P 500 futures June contract. The ticker for that, ESM 2024. The time down here is 6 a.m. That is New York time, UTC -4, which means we are 5 hours behind UK time. So it's 11 o'clock here. So everything's live here. This teaching is live. Part 2 of this teaching will also be live. So part 1 is basically me just going through how to get to the point where it's Friday and you're saying, well, am I right in looking for this setup? Part 2 will be how to actually trade the setup and execute on it. And that will be just for the Lochiel Trading Discord server members. So the first thing we are going to do, and by the way, I'm going to keep this very basic. I don't want to go off on tangents. I just want to keep it very specific to this setup. So it should be a short and sweet lesson. So we have the weekly open here. The weekly open, as you can see, is here. And I've put here as a second point, one-sided directional price delivery. Now, obviously, going into a lower time frame, you will see this better, which I'll do in a moment. But you can see that this week pretty much has been price action moving to the downside. And it's been really quite a nice, large move to the downside, really quite expansive to the downside. And that's exactly what you want to see if you are heading into this Friday to, switch this setup on. I then put a high time frame reason for price to set up a retracement. I'll probably actually go through that point specifically in other lessons, and maybe you can come back to... In fact, we'll do it really quickly. But as you can see here, we've marked in the weekly open. Well, this was a past weekly open level, and we've traded into that level. So, because it's a past weekly level, then it makes sense for business to start occurring here that we want to see. Ultimately, it should start to act as support to a degree. But I'm not really too much a bigger fan of using that language, support and resistance, as you probably know by now, if you're in the Discord. But anyway, there is a high time frame reason for price to set up a retracement here. And there's actually other high time frame reasons, but I'm not going to go into those right now. I'll give you a little tip. It is the last trading day of the monthly time frame. So let's go into the 4-hour time frame, and we'll pull in our little checklist here. And what I've done is I've put on the session breaks. Now the session breaks are just these vertical dotted lines, and you put them on. If you right click, go to your settings, to events, and here you have the session breaks. Look, and the reason I've put them on here is just to kind of show you how each line basically just delineates each trading day. So we have Monday's trading into Tuesday, Wednesday, Thursday into Friday. And I'm showing you that because what I've said here is one-sided directional price delivery. And as you can see, from once where the high was created of the week, or at least the current high of the week, we have simply traded lower. We've had retracements up back into the range, but we continue lower effectively. Retrace up, continue. Let me do that really quickly. We have the high of the week. we create a low, we retrace, not a reversal, continue, retrace, continue. So it's just creating short-term lows that end up getting taken back out. And now we have the current low of the week. So let's just map in the current high of the week, and it probably is the high of the week, but we'll put the current high of the week. Why I say is it probably the high of the week confirmed? Well, it's Friday, we only have the day's worth of trading, and obviously to go all the way back up here would be a big ask. So that probably the current high of the week is in, and it is Tuesday high of the week. We do have the current low of the week, and again, it could be the same. This could actually be the low of the week. The low of the week could be in, and we could just trade higher now today. Now, I'm hoping that's not the case. If I want to get into the particular execution layer of this trading, I want to be actually going to part 2 where I'm actually getting into a trade. And obviously that part will be for the Discord, Lockheed Trading Discord server members. So what we are essentially doing for this setup is we are anticipating using intraday knowledge. So today, intraday meaning knowledge that lives within each trading day's price action. So we are using knowledge and price action, what's occurring right now today, to get into a setup. We're not using specifically past data to get into today's trade, although that kind of is true in the sense that we have hit a high time frame reason for price set up a retracement. We spoke about that weekly open of the past over here. That could act as support. So that is past data. But the intraday knowledge is the present day's knowledge and how price is moving today. So we have the current, that should say low of the week, the current low of the week. And I would like to see price go lower to get into our setup. Now, let's just say price does indeed go lower. And the reason I'm saying that I would like price to go lower is within this current price action here, and I'll drop down to lower time frames in a moment, there's nothing here that is a setup for me to execute on what I'm about to show you is the kind of trade setup. And because of that, then I cannot actually get into the trade. Although the criteria of this setup could end up being fulfilled, I still need to have something intraday to allow me to execute on a given trade. That doesn't make sense right now. It will in a moment. So I would like for us to trade lower. If we were to trade lower, and then I drop to the lower time frames, and we then start to see something that tells me, well, that is the low of the week in, I will then look for a long and pretty much be looking for something like this, where you create a low and you retrace up off of that low. You create a low, you retrace up off of that low. And essentially, we then grab a fib. Okay, the settings are very basic. We are going to place the fib at the current high of the week, and we're going to pull that all the way down to our anticipatory low. So say we think the low is here. We're going to pull that fib to that low. That is going to create the 20 to 30% point away from that low. And all that this then gives you, this fib, is, imagine this is 100% of a weekly candle. We are looking for a trade back up into the 20 to 30% range. So imagine we set up something in here on the lower time frames that we like. I would then look for a long. Where if that is the low of the week, it should be the low of the week, right? So I can place my stop beneath it, and I would then target at least the 20% zone. Now obviously it could go to the 30%, but the target is the 20%. And if you look, that would be a beautiful trade, because what? The RR is in our favour massively. It's a 6R trade, so a big trade. And so that would be kind of perfect. So that is what we are looking for. And all that is realistically is, if I go out to the weekly time frame, is all candles have what? They have an open, which we've marked in here. They will have a closing point where the day closes and the last price is classed as the close. And they will often have a high and a low. Now sometimes you will get a flat wick, which you'll probably see more on a lower time frame. Let me see if I can see one like here. You see how this candle doesn't have a low. Its low is the open of the candle. So the candle opened and it obviously traded higher in that 4-hour window. It closed, but it has a high. But 98%, I don't know the specific stat, of candles will have an open, a high, a low, and a close. And what we are looking at here is trying to anticipate when that low is in. And once it is in, we are looking for a long higher. Now, there is some fundamental aspects of why we see this kind of price delivery, but I don't want to get into it too much in this kind of lesson. I'm rather just looking at teaching you guys the basic criteria of the setup. So essentially, guys, that is what we would want to see. And at that point, this low of the week would be our anticipatory low of the week confirmed. That's the low of the week in. And then we trade a retracement up and we close. Now, there's nothing to say, by the way, guys, we don't do something like this where we get that and we do up here and we exit our trade, and then all of a sudden in the last few hours of the day it just dumps like this. Well, that would still see us get into that trade. So it doesn't necessarily mean to be that this must then be the low of the week, but what it should do is at least provide a setup to trade back up inside of the 20 to 30% region. So for your fibs, it's simply 0, a 1, 0.3, 0.2, and that gives you the 20 to 30% range. So we're moving down here now. So like I say, I would like us to take out this current low of the week. And why I don't like this being, the low of the week is, if you think about it, we're only at 6 a.m. in New York, so we've got a whole trading day. And to me, this just looks like a low that's likely not to be the low of the week. Now, it could be. But if I just go to the 1 hour even, there's nothing here that I would see me into a trade intraday. It's just a consolidation. Prices up, down, up, down, up, down. So there's nothing there that tells me like that is the low of the week in. So I do think we trade low, and that is what I want to see. And if we can, and then we get into some price action that I like to see, that will be then part 2 of this lesson, where I will then look to get into a trade. I'm going to show you how I do that. But just as a quick recap, you're marking the weekly open. What I'm going to do is I'm just going to pull this all the way along. Has the high of the week been printed? Yes. Has then, since that moment, price been one-sided in its direction? It has. Where has it been one-side directional to the downside? High time frame reason for setup, I've mentioned. We've hit that old weekly level. And now we begin to anticipate using intraday knowledge that the low of the day, thus the low of the week, is formed. So obviously the low of the week, if it comes down here and then obviously moves back up, that will be the low of Friday, but also it will be the low of this entire weekly range. And that is what we are looking for here. I'll just go a little bit of detail here. So why I don't want this to be the current low of the week. Well, if you look closely, now this is getting to a little bit too much detail, but why not? So each and every single day of trading within the stock market has a point where it closes each day. It's not like cryptocurrency that is 24/7. It has a closing point. And that closing point is where these lines are delineated. So it's not, the lines aren't delineated like midnight to midnight. They're delineated at the close of each day or the start of each new day at 6 p.m. So the market's open each new day at 6 p.m, which actually means that they always open. Each new day that opens has a period of time from 6 p.m. till midnight that is actually trading prior to that day. So I'll show you here just quickly. And it's probably best I go into a 15-minute time frame. You can see this probably clearer. So the delineation is here at 6 p.m. That is because the market closes each day at just shy of 5 p.m. So it closed up here at 5 p.m. So I'm going to put a red line to delineate that. And then it opens again at 6 p.m. So obviously then this 6 p.m. up until midnight. So all this section here, I delineate this as a, let me just do it as a yellow line. Or a green line even, so you can see it clearly. All that period there from 6 p.m. to here is technically Thursday's trading, right? So although this side of that delineation of each new day, and it is Friday. It is technically the fifth day of the week, let's say, of the trading. It is, on a time perspective, still Thursday's trading. So that's one of the reasons why I don't essentially like this low, because it was a low that got created in Thursday's trading. This period is called regular trading. It's called electronic trading hours. You see down here it says ETH. That means electronic trading hours. So I'm giving you a lot of information here. Electronic trading hours. Officially, regular trading hours opens 9:30 each day, New York time. So essentially, all of this period here is regular trading hours. So why I don't think that is the low of the week is, it seems too much of a weak low. There's not much market kind of buying, selling going on right now because it's so early in the day in New York. But again, it could become the low of the week. It could be, guys. There's no rules specifically within trading in that sort of way but it's all about anticipating. It's all about speculating. And I'm speculating using my knowledge and what I've just told you, amongst other things as well. But I'm not going to go into too much detail. That is unlikely to be the low of the week. So I would like to price to trade lower. I would then like to see it form something that I would like to see, that I think, you know what, now the weekly low is in. Then I will look for that trade. I will put the fib on. And then I will, obviously, at that point, be going through part 2 of this lesson. So I hope that helps. Quick recap. We start out on the weekly. We're mapping in. So now we've gone off at tangents a little bit. We're mapping in the weekly open. We're seeing if price has been one-sided in its directional bias. And even on the weekly time frame, we can tell that. We go to the daily. Look at that. All 1, 2, 3 days worth of downside price action. Going to the 4 hour, we see that even closer. Constant downside price action. Now, by the way, guys, it might be that we have a heavy move lower and we end up pulling our fib all the way down here, let's say. And then we just look for the exact same trade all the way back up. Now, there's one final thing that I will open the next lesson with, and that is the fact that there are 3 equities, right? ES, S&P 500, NQ, Nasdaq, YM, Dow Jones. Now, it may be that... Oh, there's an alert going off there. It may be that ES and NQ don't create this setup, but YM does. And it's very, very likely that when you get a week like this, where all the criteria we've just spoke about has been ticked off, at least one of the 3 equities will present the setup for this Friday trade. So there we have it. Your first setup, my first model, my first system that I'm teaching you guys. And there we have it. And as you can see, market is open. It's all live. We're not teaching via hindsight here. I've specifically waited for this sort of week to actually teach it and then hopefully trade built upon the knowledge I'm sharing you here of what I want to see. So, see you in part 2, hopefully. Okay guys, so welcome to part 2. And as you can see here on the hourly time frame, that low that was the current low of the week, which obviously is no longer the current low of the week, was taken and price went below it. And as I said, and I gave the reasons for why I didn't expect that to be the low of the week. And as we can see, that has proven true. So we're going to now touch upon a few different ways we can execute on a trade. And before I kind of go into the sort of those specific things, I just want to put in the fib again. So we have our fib from our high to our new low of the week. So now we have the current low of the week. And if we anticipate that this is the low of the week, then our target area for getting into, just make sure that this is accurate and put this here. Our target area would then be the 20 to 30% range up here. So we're going to drop down into the 50-minute time frame because the hourly doesn't give us too much information. And I'm going to place a buy here now, right? And why I'm showing you this is It can be at times a little bit finicky. So just mapping that out. And the take profit is here. So if that is the low of the week in, and obviously Friday is low, straight away, in terms of risk reward, the risk reward is in our favour. We are risking $400 to make $700. Now, I am not saying that there's anything here in terms of setup specifically on the lower time frames, like this 15-minute, down even to as low as the 1 minute, that I like too much in terms of, right, we've got to go for this long, it's a perfect setup. However, there is a few little aspects I do like. And I don't want to go into too much detail in terms of getting too far ahead, because what I'll have to teach is ways we get into price. And then we bring those ways, there's loads of different ways, loads of different styles to get into price. And then obviously if you see one of those, then you get into that trade. But rather, I'm just showing you here, and I want to show you the process of this style of trading and what we are aiming for here. Now, one of the reasons why I do like the fact that the current low of the week, and this could be it, that could send us higher, is this low that I mentioned that I didn't really like in terms of the fact that it got created in electronic trading hours. And sorry, in the part one, the second time I called it regular trading hours, my mistake. It is electronic trading hours. And we're still in electronic trading hours up until 9:30. So the low got created, we came higher, and we've dropped through it. Anybody that was actually anticipating that this would be the low of the week and price was going higher, where do you think their stop loss was? Beneath this low. Because that is what the books tell you to do. Place your stop loss beneath the low. Exactly how I'm doing here. But the difference is between my low here, where my stop is, and the previous one is, this has more potential to be the low of the week than this low, because this low here has now at least taken some liquidity. So it's knocked any early longs, any early buyers that came into the market that was looking for price to trade higher today. This move down has now taken their stop loss out, and price has aggressively moved away. And because it aggressively moved away, that is another reason why I don't mind looking for a buy here, which I've got into a buy. If I now go into the 5-minute time frame, so we'll get into a little bit of detail here. Do you see how we had a high here? I'm just picking that up on the 5-minute. We've actually created a high and then we created a low. This low, if we were to see a retracement, you'd expect, which is what we're looking for right now on that bigger time frame. But if we use the exact same criteria, imagine this is a weekly time frame, and imagine, let's say that this was Monday open, and this was Tuesday high, Wednesday, Thursday, and we're into Friday. Isn't this the exact same as what we're trying to do? And what I would say here is, where we create this low, then we create a high, we create a low. If the order flow was to the downside still, we should get a retracement. And we should keep going like this, whereby we keep creating high, lower high, lower high, and on the opposite side we have low, lower low, lower low. So the trend is still to the downside. Well, with this really nice aggressive move away, what have we actually done there? We've now actually created a higher high. So structurally, the 5-minute time frame has potentially shown signs of a potential reversal. So with that in mind, this is why I don't mind this as a setup. I'm not saying it's, the optimum setup and stuff like that, because there are reasons why it isn't. One is we are still in electronic trading hours only, and there is actually a few news drivers that are going to likely come into the marketplace today, and there is one at 8:30, there is one at 9:35, and there is one at 10 a.m. So there's a lot of time points involved within trading, and 8:30 is where I'd expect volatility to come into the marketplace. So you say, okay, if this is not the perfect setup, why am I getting into a long here and risking $400? Now, this risk is slightly too large. But what if I now go to and this is a risk management method, if I go to $250 and I say, okay, I want to catch the low, but I'm going to give myself a 3 strike rule and a maximum loss of $500 today. So essentially, this distance here between entry and exit is 250, so almost like 2 of those. And I know that even if we go lower, so I'll move the fib, even if we start to trade, let's say down here, and we can catch the low and we can buy near the low, the range should at least be able to give an amount of money, which still means that even if we lose $500, the next trade, if we get in the third trade and it becomes successful, we earn that $500 and more back. So now I've got a... Now, again, guys, this is very basic risk management I'm teaching you here. I'm using it more as an example purpose. But you can see here, if we now start to expand away, we can start to get to a point where we then risk manage in the trade. Let's say we end up trading up to here, like this. Now I can at least bring my stop closer into the trade. It reduces risk, and I can even bring it into profit. I'm not going to do it, obviously, because where we are, but I can bring it into profit. And then that means we have almost like a free trade where we have the criteria in the trade, we've got into the trade, and now we're managing the risk in the trade. I've showed you why I've got into the trade on the intraday perspective. We've taken some lows. Remember, on the weekly time frame, I spoke about how we have traded into that old weekly level. So let me do that in purple. So that's that high time frame. And again, there's multiple reasons why this is a high time frame reason for price setup, a retracement. But I don't want to go into too much and make this confusing. Let's go back into that 15-minute time frame. You can see, look, this is where we are. So if we can start to close above this purple, we could have potentially started to have seen accumulation where buyers are stepping in beneath that weekly levels, and these are discounted prices, cheap prices, for it to ascend it higher and hopefully start to target our 20 to 30% trade. And let's say we get this trade and it becomes fruitful. Remember what I said earlier about this doesn't need to necessarily be that low of the week. We could go all the way up. It could reject here and dump hard within regular trading hours, maybe 10 o'clock on the news, etc. And then we could even potentially then start to look for that exact same trading style again off of a new low of the week. So there's a few different ways we can play this. And as you can see here, I'm showing you this live, which is rarely done in the trading space because it's, again, people, and look, it's live, the market is open. If I just come out a second, the time is 12:12, which means it's 7:12 here. We're 5 hours behind in New York. Again, lower time frame. Liquidity was taken from this low. Any early longs were taken out and now it's gone ahead. What do you think that does to these people here? So let's say you're in this trade, and let's say you bought here, or even traders bought here. Price is up here, and if they didn't take profit, so they didn't take a profit, and they're now seeing price go lower, they're thinking, oh, I hope I don't get stopped. Hope I don't get stopped. Boom, big wick down, they get stopped. All the early longs get taken out of the marketplace. And then they look at this move up, and let's say it goes all the way up here, they'll kind of be like, so I was correct, but, I ended up losing. Well, that is timing. And again, the aspects I've spoken to you about this low being quite a shallow low, a weak low, in the fact that it got created in the first kind of part of the trading day, it was not something I liked. Now, there is another reason as well around here. There is a certain type of level here, which I'm not going to go into just yet. That is a reason why I actually do like this long as well here, and why I got into it quite aggressively. But then, for your knowledge, let me just clean this up a little bit. And what I'm going to actually do is, just for now, move the fib. What I'll do is I'll go out into a 4 hour time frame and I'll put it on this side of the chart. So, the high of the week. There we go. So liquidity taken into that weekly level. Nice reaction away. Look at the 5 minute time frame. As soon as it took that liquidity, look how that big 5 minute candle goes. Whoom. And you see how we took the structural change of the 5 minute. Look at the 5 minute leg down. We have a high. We have a low. We have a high, which is a lower high. Lower high. Lower lows. Lower high. Lower low. And then this high shifted and broke that rule set, as you can see. So we're at $200 profit so far. Now if I bring my stop to here, we've now reduced some risk in the trade, which is healthy. Because if price is to go up to our region, it shouldn't necessarily now need to come all the way back down into this low again. Can it? Yes. But again, we are speculating on price using the principles I'm teaching you here. An area of interest to me in terms that could stop price, hold up price, is this zone here. This is kind of a lot of detail. I'm just going to mark it in on the 5 minute. Let's get rid of these arrows. You can see it there. Look, as soon as it dropped down, look how quick it wanted to shift back up. And like I said, in doing that, it broke that. It broke the. Oh, 5. It broke the run of high, lower high, lower high. Let's get this right. Lower high. As you can see, it's going down, and all of a sudden that one there went up. So it shifted that. So now what we want to see on this side of the move is it create a low and move up. And then what do you have? You have a low with a higher low. And then we're seeing that shift. Wow. 8:30. I'm just going to map in here. Is where there is a news driver. So I'd expect volatility to come into the marketplace at that point. 9:30. So I'm delineating here key time points. So we're getting deep here. 9:35 is actually a news driver. It's nothing major, so I wouldn't do that as one dot. It's nothing major. And then at 10, we also have the kind of big news driver for today, which is revised UOM consumer sentiment, which is technically the last news data set of the month, because obviously today is the last trading day of the month, which is not normally a trading day I like to trade, because as you can imagine, people who have been in a trade all a month, and let's say they're profitable and they want to get out at the end of the month, they'll be exiting trades, which means a lot of flow can come into the markets. So what I'm going to do, I'm going to stop this here. So obviously there will become kind of like part 2B, part 2.2 of this lesson. Because, this may take some time to play out. But we're in the trade. We've reduced our risk to $200, $700. We're in profit here. So technically, let's say you want to make $200 a week. Well, at that point, we already reached $200. So there's a profitable trade right there. And you've got a concept, a setup, a criteria, an idea, a reason to get into it. We're not just clicking buy or sell. Like I said, there wasn't too much in terms of the intraday lower time frame stuff that I like in terms of setups. But I did give you some reasons to get into the trade. What was it? We took liquidity from that low. Early buyers get taken out of the marketplace. What's important is we got a rejection away, and you see that rejection really nice on the 15-minute time frame through that big wick here. Okay, through the big wick. The 5 minute shifted in structure, And as you can see here, look, the 1 minute is moving to the upside now. So I'll stop that there. And of course, in terms of off of its low, we'll probably be halfway to the target, to at least the first target here. And obviously if you start to expand really aggressively at this point, you just bring this up to maybe halfway, the midpoint. And if price keep traveling, you bring it to 0.3. And then what I'll start to do is bring in a trailing stop loss as well. So there we have it. But let's leave it at our point for now. And I'll stop the video. So again, welcome back to Lochiel Trading. And as you can see, the time is 8:20 New York time. So we're 10 minutes away from the first news driver. As you can see here on the 5-minute time frame. And look how nicely our trade is going. We're 462.50 up, which essentially means coming into a news driver, which could really bring some volatility to the marketplace. I'm going to just bring up my risk to $100 now. So essentially, this is a change in the R of the trade, risk versus reward. So initially we got into the long position here, and we had the stop loss down here, and our target was the 20% region here. And actually now the R has gone from a 1.81 R, we're risking 1.81 par. So we're risking 1 par to gain 1.81. Now we've actually evolved that risk into a 7R trade, effectively. And as you can see, we're approaching, and would it be really nice to actually get out of this trade before the 8:30 news driver? Even if the 8:30 takes us higher, maybe to the 30%, we're not being greedy here. I'm showing you this as a beautiful example. And we've only been in this trade, if I go to settings, trading, executions, we got into this trade on this candle here, which was 7 a.m. We just got a 1 minute time frame, get the exact time. 4 minutes past 7. So just over an hour, and we've nearly reached the $700 target. We're currently $500 up. Now, let's say your target for the given day was $500. Let's say it was $300. You could take an exit now. Beautiful, profitable trade. Built upon all the criteria I've gone for before this has occurred. Because you can see this is all live data. Nothing hindsight about this. You can see that from my execution toggle look, trading view beautifully. And once I click the execution label, the label goes off. So you can see a trade that I've made there. Interestingly, we didn't stop where I thought. Maybe have a pullback, but we've actually gone above it and held it as support. So that is interesting. I'm just going to remove that now. And we are going into an 7 minutes time. 8:22 down here. 13:22 up here. Obviously 5-hour difference between New York and UK. So, and if we go back out now into like a higher time from the hourly, and let me just remove all of the vertical lines from the hourly time frames. So bear with me a second. I'm just removing these vertical lines from the hourly time frame. We don't need to see them. So we've made a trade here even before the regular trading hours at 9:30 New York time has opened. And let's just get rid of the free strike rule. And for a moment, I'm just going to hide the positions, the orders, just to give you just the setup here. So current high of the week, weekly open, downside one-sided price delivery. We're then anticipating using intraday noise at the low of the day, that's the low of the weakest form, which is this. This is our anticipatory low. Low of the week, which we've built along off of with that trade, expecting what a retracement back up into the 20 to 30% region, and we're nearly there, closing in on a high. In fact, it's not a high impact news driver, it's a medium impact news driver. The bigger one is at 10 a.m. But we may see some volatility in the marketplace that hopefully pushes us to target, as you can see there. What I would not like us to do is go back below the purple level on the high on the lower time frame. So if we go to the 5 minute maybe, and we just zoom back in and put on our positions and orders, Yeah, I wouldn't like to see us go back below purple. So effectively, if that's the case, what could I do? I could bring my stop to that area, and I'll at least take $100 from this trade. But I'm not going to do that. I'm confident that we are going to trade to our target, if not higher. So let's watch this out. 5 minutes. In fact, what I'll do is I'll come back in about 3 minutes time, just so the video is not as long. So I've just returned earlier than expected. 3 minutes till the news driver, and we are approaching our $700 target. Very close. I do actually feel as if we trade higher, but I'm not going to run the risk of 8:30 opening and really going lower. We may not get too much volatility because, like I said, there's bigger news drivers to come. Specifically, the red one I've marked in here at 10 a.m. And we do have a 9:35 news impact coming in just after the market open. But this would be a trade prior to even the market opening, built upon all the things I spoke about in lesson 1. And obviously now I've gone into the execution layer on a lesson 2 for you guys in the Discord. So it's really that 5 minute shift after taking liquidity, moving back in. We're above the purple higher time frame level. There's a few other aspects that I don't want to go into it too much in terms of detail, because I can do that in the future. And once you really start to understand price, you probably could watch this lesson back in the future and say, I see what you're actually doing there. I see what you've seen in terms of other aspects of the chart. And if you've been paying attention within the Discord recently over the last week, I spoke about how when you have a high or a low, and then you have a high or a low very close to it and you're away from it, liquidity gets built there, because what occurs is anybody short in the market, let's say in a sell position from down here and price is going down, as it gets down to this point here, and then even say price is here, they roll their stop losses above these two highs because they think that is resistance. So once the market does in fact do its turn around, it will target the pocket of liquidity above this high. Hence why getting into a trade here, we took liquidity from this side of the marketplace. Now price wants to reverse or retrace, is what we're trading, retracement of the weekly low that we think is in to liquidity. So again, I'm giving you a little bit more alpha there, but that's in alignment with what I've already taught you guys in the Discord this week through the analysis sections. You know, I truly would have loved to have been able to learn in this dynamic fashion, guys. Everything I have done in the past is for me from courses, from classes that have been looking at hindsight data to kind of extrapolate knowledge. So we're getting a bit of volatility already, look, coming into, let's watch it on the 1 minute time frame, into the 8:30. But yeah, you know, in books and static fashion, and then you've got to try and bring all that data into what is occurring now live in price action. And I'm showing you this live. So if I say so myself, you can't get a higher level form of teaching than this. I'm showing you a setup. I'm in a trade, and all of this, I'm in a trade. There you go, look. Beautiful 8:30 snap. You see that 1 minute candle, look, boom. So even there, look, beautiful alpha coming in. There you go, look, and it's probably going to go to the 0.3. But we took and then look at that rejection there. So we took the $700. Here we go, look, executions. Here is the buy. See that little blue arrow comes up, buy. Here is the sell. Look at that volatility there, look, boom, right into the green zone, and then it's already moved away. And obviously I didn't want to really be involved in that volatility, although look, it's going up and we could have got $800, $900, $1,000. But we took the trade, we had the target, beautiful, okay? So there we have it, a perfect trade, news coming in at 8:30, giving that real nice volatility. Look how slow this price action has been. 8:30, boom. So time, understanding news drivers, and the perfect Friday setup there. So I may conclude this lesson with what was NQ and YM doing at these moments as well.